Welcome back to Alpha Recap. Thanks for joining us after the close. We wrapped up a pretty eventful Friday, and we've got tariffs, AI headlines, heavy retail volume, and some earnings and analyst noise to sort through. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack. Markets closed up in some pockets and down in others, and today's action was really driven by one big policy story plus a handful of headline-driven tech moves.
Let's start with the biggest macro slice. The Supreme Court struck down those Trump-era tariffs, and that was the catalyst for a relief rally in apparel and auto stocks. Investors treated it like a de-risking event for costs.
Right. The takeaway was simple. Tariffs were taken off the table as a recurring cost risk. So companies that import clothes or auto parts suddenly had cleaner margin assumptions. Analysts are going to rerun models.
Exactly. So what really stands out here is that it wasn't a demand story. It was a supply chain and margin story. People cheered because input cost uncertainty just fell.
Expect follow-up notes from analysts on apparel retailers, branded manufacturers, and automakers that rely on imports. Some companies that had flagged tariff headwinds might revise guidance or messaging. That's a real catalyst.
And that can re-rate the stocks if the math shows better near-term earnings per share. Not huge overnight miracles, but notable.
Yeah, absolutely.
Moving into tech. The headline that grabbed attention was a claim by GIBO Holdings about a breakthrough in a multimodal AIGC engine. It sounded exciting, but the release lacked timelines and revenue guidance.
That's the pattern we keep seeing. Big-sounding breakthroughs, but no commercialization details. Investors want demos, customer wins, partnerships, or clear monetization steps before they commit money beyond speculation.
Totally. So the immediate reaction was speculative, headline-driven volatility rather than conviction. If GIBO comes back with a demo or partner within days, that will change things. Absent that, it's trading fodder.
Right, and the market rewarded the story in small caps that chase AI news. But let's not forget the other big tech name today, Nvidia.
Yeah, Nvidia traded with huge liquidity, but barely moved. It finished the day down essentially flat, a hair down, to $187.90. And about 124 million shares changed hands. That's heavy volume and a muted price move.
Important nuance there. Liquidity and headline interest don't always translate into a big directional move, especially in a mega cap where positioning is enormous. People were active, but prices stayed range-bound.
Right. And the other thing is that while Nvidia sat flat, a semiconductor-focused leveraged ETF saw notable strength. The ETF that shorts semiconductors for magnified moves rose about 2% to $1.75 on very heavy volume.
Which is interesting. It suggests pockets of bearish positioning, or at least big leveraged bets and rotation. So you could have some traders rotating out of selected names while the mega caps held firm.
So the tape basically showed two parallel dynamics: durable thematic interest in AI and headline-driven small-cap speculative flows. Both can coexist.
Exactly. And that brings us to the retail and momentum story. Several low-price names printed massive volume and moved a lot on those flows.
Quick numbers so listeners get the scale. One tiny name was up about 5% to 43 cents on roughly 303 million shares. Another active name climbed about 3% to $11.39 on roughly 102 million shares. And one low-dollar name was down about 3% to $2.38 on around 107 million shares.
Those are huge share counts and classic retail momentum profiles. When you've got that much volume in cheap stocks, fundamentals often take a back seat for a while. Execution risk goes up big time.
Big move. Retail traders were very much in control of the intraday chatter. For portfolio managers, that means heavier attention to position sizing and stop discipline. For traders, watch intraday liquidity to confirm follow-through. Switching gears to real estate. KeyBank lowered its price target on Invitation Homes, citing weak fundamentals. The note didn't give detailed numbers, but analyst downgrades tend to increase downside pressure in REITs.
That's one of those spots where credit and dividend stability matters. When an analyst flags weakness, fixed income desks and competitors dig in, and financing spreads can widen.
So for anyone holding REITs, the immediate action was to check leverage, payout coverage, and forward guidance. If you own mortgage-sensitive names, this kind of note can be a reason to revisit risk exposure.
Right, and small details can cascade because markets price risk quickly when distributions or credit quality are questioned.
We also had a couple of lighter consumer and edtech items. A marketing awards program released winners, and a test prep firm put out a book update and a free sample. Those are marketing catalysts, not fundamentals, unless they translate into sustained sales gains.
Awards and freebies can help user acquisition or branding, but the market wants to see whether those translate into revenue or improved retention. Otherwise, they're just PR lines.
Yeah, that tracks.
So what are the themes we should take from today? Policy shocks move sectors. The tariff ruling proved that. Retail and momentum remain dominant intraday forces. AI continues to attract headlines, both credible and speculative. And analyst moves keep pressure on REITs.
Concise and accurate. I'd add that investors are getting more discerning on AI claims. Breakthroughs without timelines get attention, not conviction.
Right. And for traders watching semiconductors, if leveraged ETF flows keep diverging from the big names, you could see rotation within the sector. That's worth monitoring.
Let's do a quick rapid-fire recap of the most important data points so listeners remember the specifics.
Go for it.
Nvidia finished the day down, essentially flat to $187.90 on about 124 million shares.
The small, high-volume name we mentioned closed up about 5% to 43 cents on roughly 303 million shares.
That semiconductor-focused leveraged ETF rose about 2% to $1.75 and traded extremely heavy volume, a sign of big thematic bets.
Another momentum stock closed up about 3% to $11.39 on around 102 million shares. And a different low-dollar name was down about 3% to $2.38 on about 107 million shares.
GIBO's AIGC breakthrough was announced, but without monetization or timeline details. So follow-ups were the key ask from investors.
And KeyBank lowered its target on Invitation Homes, citing weak fundamentals. Details were pending, but that note likely increased short-term volatility for REITs.
Okay, quick reactions. Wow, retail was loud today.
Tell me about it.
Honestly, I was a bit surprised by how much volume those cheap names printed.
Yeah, that level of retail activity can really amplify moves.
So what should listeners watch when markets reopen? First, analyst notes and company statements on the tariff ruling. Apparel and auto names are on deck for revisions.
Second, any demos, partner announcements, or commercialization timelines from GIBO. That's the difference between speculation and a sustainable story.
Third, watch price action in Nvidia and semiconductor thematic ETFs. Divergence there could indicate rotation or profit-taking.
And finally, any follow-up from KeyBank or other analysts on Invitation Homes. A more detailed note could drive bigger moves across REITs.
All solid points. Let's close with 3 clear takeaways so listeners can walk away with action items.
I'll start. Takeaway 1. The tariff ruling was the largest fundamental headline. It reduced policy risk for importers and could lift near-term EPS expectations for apparel and auto names if analysts and companies confirm the math.
Takeaway 2. In tech, headlines still matter, but investors demanded commercialization details. Heavy volume in big names didn't necessarily equal big price moves. Liquidity and positioning can mute directions.
Takeaway 3. Retail and leveraged ETF flows created noise and execution risk. For active traders, watch intraday liquidity, and for portfolio managers, double down on position sizing and stop discipline.
All right, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be watching how companies and analysts respond to today's big headlines, and we'll bring you the follow-up in tomorrow's recap. See you then.